Scott, thanks again for having me tonight. I think a lot of today was coming into a weekend after a really strong week. I mean, we had a great year this week with 10% returns in 1 week. If you forget about where we were last week, of course, a lot of that was a great rebound. But coming into a Friday where there's going to be more news over a weekend, traders don't want to have long positions on their books. People want to get flat so that they don't find something that, they owned Friday has lost a lot of value based on news reports over the weekend. So I think that this was a getting flat. I think it was reasonable. I think markets have been behaving rationally. It sort of made sense coming into a close on a Friday, particularly after the week we've had.
All right. So, Art Hogan, where does this leave us for the week ahead?
Yeah, it's a great question. I think this week, and I agree with Michael, this week was very constructive in so much as we shot down in a record fashion, 34% in the S&P 500, and then bounced back 18% in 3 days. And that kind of volatility is typical of the kind of flush that we had, that panic flush. And this is what's setting up as a bottoming process, right? So, go back to 73, 74, we had a 20% pop before we hit the low. 2001 and 2, we had 20% moves to the upside. In 2008 and 9, in the October to March timeframe, we had a 27% pop. So we're in that phase now. We're going to chop. I think we found the lower limits of what we're going to sell off in the S&P 500 2250, 2300 level, and the upper limits are certainly at or where we closed on Thursday. And I think we get some chop to do because investors now have to face a tsunami of negative news, both in the form of economic data, which, as we saw in the jobless numbers, is going to be ugly for a period of time, and then the escalating and new case discovery in the United States.
Michael Farr, do you think we go back and test the lows?
I do, but Scott, I think the dangerous part are the narratives that we're all developing. I mean, Art's as experienced a guy as out there. He and I have been doing this a long time. While he and I may tell you that we feel like that bottom is in, we don't know. And getting comfortable with so much that we don't know is tough. I mean, when you think of all the good news that we've had this week to sort of support the economy and markets, we also today had the president ordering General Motors to start manufacturing ventilators. I mean, that doesn't sound like something that's coming to an end quickly. So investors have to try to not be emotional, have to be data dependent, and they have to get used to kind of being, comfortable with what we don't know. So it feels like that certainly is a bottom that could hold, barring other news. I certainly hope so, but we will need to see it go back and test. Bottoms are made by testing those old lows and rallies and testing them again, and then you dig yourselves out of those bear market holes.
Art Hogan, you used the word constructive earlier, and part of me wonders whether the thunderous move we had down and then this thunderous rebound we had up somewhat cancel each other out, and now we're left to figure out where we're going with the curve of the virus, and then we make our next move.
Yeah, I think that's exactly right, Scott, and I agree with that analogy. When we think about, the news is thrust upon us, it's not something, that we largely expected, and then the news continues to get worse. So markets are a forward pricing mechanism, and they try to calibrate how much economic damage is going to be done. And to Michael's point, we just don't know. We don't know the extent. We don't know how long this lasts. We don't know just how long we'll be shut down as an economy. And we're literally shutting the economy down to stop the spread of this virus. So, we're doing this on purpose.